Hello and welcome to another episode of Stock Talk. It's great to see you again. A couple episodes ago, we introduced you to Nio, and you guys ate it up. We were really able to generate a lot of excitement about an opportunity in investing in an early-stage EV venture already rivaling Tesla from across the globe. Today, we wanted to hit you with a deeper dive into Nio, but also introduce you to two other players, Xpeng and Lucid Motors. How exactly do they all stack up against each other in their respective markets? What does the EV market look like outside of the United States? Well, stay tuned and find out because we really have an exciting show for you in store today. But before we do, be sure to click like and subscribe to keep up with our latest episodes, news, and analysis. And be sure to keep the discussion going in the comments below. As I'm sure most of you remember, Nio is a Chinese multinational electric vehicle manufacturer headquartered in Shanghai. It practically had to get bailed out during the pandemic, but has since rebounded. In its short life, it has already released 4 models and produced over 100,000 vehicles to date. Nio stands out for many reasons. One big reason that we'll reveal later, and 2 of those reasons are part of its software subscription model with the ability to deliver the unprecedented Level 4 autonomy. They call it BAAS and ADAAS, meaning Battery as a Service and Autonomous Driving as a Service. Not to mention its first ever in-car NOMI artificial intelligence software. Their cars are loaded. So where does the competitive market stand? China is not only the largest auto market, it is also one of the largest EV markets, representing almost 40% of the world's EV sales last year. And by 2025, the global autonomous car market is estimated to be valued at 1.6 trillion. Talk about an opportunity. Now, how exactly will this opportunity be carved up over the next 5 or 10 years? What EV companies do you have your eyes on? Let us know in the comments below. Nio is already global and starting to penetrate the European market by way of Norway. One of its competitors, Xpeng Motors, also Chinese, also has an international presence. Lucid Motors, their American competitor, is domestic with but one location in Canada. Now, while Tesla and Lucid could be more directly competing in the American market, the whole world is still up for grabs. Nio is still, for the most part, concentrating its efforts in China and Europe. But if you remember from the last episode, Nio has already started looking to hire an American market expert. And an entry from Nio or any of its Chinese competitors has, as Barron's recently put it in an article, the potential to be a game changer for the entire US car business. We all know in this crazy age of tech and innovation that disruption is the name of the game. It is not the exception, it is now the rule if you want to stay relevant. So, what about Nio and Xpeng? Both were founded just 6 years ago in China, and both have robust investors backing them. Nio has been backed by Tencent and Sequoia Capital. Xpeng is backed by Alibaba, Coatue in the US, and Sequoia Capital China. It raised $1.5 billion at its IPO and, like Nio, is also developing autonomous driving. Its ticker, XPEV, is stock priced similar to Nio and is also similarly unprofitable, bringing in a negative $2.73 billion in earnings in 2020. But if you look at its price chart, a bullish pattern is emerging. And analysts on average are estimating a 46.95 price target, with some going as high as 60.61. Many top banks are setting their ratings to buy or overweight XPEV, and these include Nomura, Jefferies, Bank of America, and Morgan Stanley. But look, the reality is that Tesla is still king in China. Just last year they sold almost 140,000 Model 3s. Nio and Xpeng, even when combined, don't come even close. So what's the big idea then? Well, don't just take my word for it. Also take CNBC's. They recently surveyed a variety of EV buyers in China, and they noticed that, at the very least, the Chinese are starting to take notice of their own domestic makes, particularly those of Nio and Xpeng. Let's put this into perspective. Now, bear with me because it's not immediately intuitive, but it will be eye-opening. Of EVs sold in China just last year, Nio is in 10th place at about 28,000 vehicles sold. Xpeng comes in at 19th place with just around 15,000 sold. Don't think that's impressive? Well, think of this now. 1/3 of every Tesla, Nio, and Xpeng sold was either a Nio or Xpeng. Could this become a trend? Could this be the beginning of attaining a sustainable level of market share from Tesla? What do you think? Let us know in the comments below. CNBC's survey also found that for many Chinese consumers, what matters to them is price and driving range. Starting with price, even a Tesla Model 3 is a bit on the pricier side, starting at $41,000 in China compared to Xpeng's starting price of $27,800. Both have comparable driving ranges, over 300 miles on a full charge. Now Nio's lineup, while not necessarily at the most expensive of starting prices, racks up costs very quickly once you start optioning the car, options that may end up doubling the cost of the car over its competitors. But for what it lacks in price competitiveness, it makes up for in battery swapping. That's not something most, if not all other EV manufacturers have not mastered. Remember, Tesla tried, but ended up pulling back. And in China, where the government is just starting to build up infrastructure for a charging network and EVs actually lack the dedicated parking space charging stations you see here in the US, this just may give Nio the starting edge it needs. Not only that, Nio has also started setting itself up to be a lifestyle brand. The motto on their website is to quite literally shape a joyful lifestyle. Their lifestyle component has two parts, Nio House and Nio Life. Nio Life is a fairly easy to understand. We've seen it before. It's called merch, anything from clothing to gourmet food and travel, even a scooter named the Nio Pal. But what about Nio House? Well, the Nio House is literally a 7-room clubhouse. Can you imagine? It's to foster a community of vehicle owners, complete with a cafe, library, kids area, and various meeting rooms and common spaces. So, is this a smart investment? Will this truly create a community when EV market share becomes saturated? Will it be an effective differentiator and draw more people to the brand? Let us know your thoughts in the comments below. So, what about Lucid Motors? Lucid Motors is nearly strictly an American company with just one location in Canada. It's almost as old as Tesla, clocking in at 14 years. But it's not always been an EV manufacturer. It started off as an energy storage and OEM parts manufacturer for other makes. Only as of 2016 did it initiate plans to develop an all-electric, high-performance luxury vehicle, and since then has been developing a manufacturing plant in Arizona with the aim to produce 400,000 cars a year once completed. Their Lucid Air model is expected to be released in spring of this year. Priced at just under $70,000, it will deliver 480 horsepower at a 406-mile range. Like Nio, it will use Intel's EQ4 chip to make it autonomous ready, for when regulators give it the green light. It will run on level 3 autonomy and require charging stations. As of this February, Lucid made a very exciting announcement. It is entering into a definitive merger agreement with Churchill Capital Group via its fourth SPAC, CCIV, to take the company public via IPO. The merger is supposed to close sometime this second quarter of 2021. Part of the SPAC arrangement is also going to allow what's called a PIPE, or a private investment in public equity, targeted at 15 per share asset managers like BlackRock, Fidelity, Franklin Templeton, and Neuberger Berman will be able to initiate positions in Lucid. When all is said and done, assuming a $24 billion IPO, Lucid will raise $4.4 billion to fund development of its first model, the Lucid Air. There is really no doubt that the car market is facing disruptive change. Remember, that is the name of the game now, folks. And as the EV market disrupts the internal combustion market, so do players like Nio, Xpeng, and Lucid disrupt Tesla. That being said, these companies are at different growth stages and are picking out ways to differentiate themselves. The question is, how will their individualities best serve their markets, and how do their geographical markets prepare them to challenge other geographical markets? All this is yet to be seen. What do you think? Any predictions yet? Leave us a comment below, and as always, if you liked what you saw and you want to stay in the know, be sure to click like and subscribe. Thanks for watching.